So hello, everyone. I'm Pamela Wallin. I'll be leading the conversation today with David Rosenberg. But first, why don't I just go to Greg McDougall, who, along with Steve Sanders, really is government analytics. They're your hosts for the day. So Greg, if you'd like to say hello.
Thank you, Senator, and thank you, Mr. Rosenberg, for joining us. It's a real privilege and an honor both to have the caliber of both of you, the Senator with her long and storied history in journalism, and as someone who's probably one of the most curious people in the country, and then to have Mr. Rosenberg, who has been leading the charge throughout his career in terms of understanding economics and the markets. And
I'm really just more of a creative ideas guy, trying to help people stay out of trouble, and along the way, make a little money without striking out. In terms of bullish or bearish, I mean, both are fairly extreme terms. It's whenever it was I said that we all get vaccinated, that might have been months ago.
Yes, exactly.
Maybe before Pfizer Monday, which was a game changer. And now we're seeing the rollout. I personally got my first vaccine on Saturday, and so far no blood clots, and I don't have a sixth toe, so far so good.
Okay, so that's good. So now I want to start with just some of your take on the U.S. economy, because of course it has such an impact here. There's two things. The U.S. economy has recouped about 76% of the pandemic damage. On the other hand, you've got these people predicting, including 3 magazine covers, as you noted, The Economist, Bloomberg, and Money Week, talking about the roaring 20s. And there's going to be this growth euphoria. Where do you think we've settled as we talk?
Well, there's no roaring 20s this time. I mean, we didn't shut down the economy in 1918 and 1919. It just ultimately, the Spanish flu burnt itself out. So we went into the 1920s with a government debt to GDP ratio, Pamela, of 10% of GDP, right. Not 100 or 200% of GDP. We didn't blow our brains out on fiscal stimulus. And of course, it was a different society, maybe a less compassionate society. But because balance sheets were in such better shape, it gave governments the opportunity through the 1920s to do this thing called cut taxes for individuals and for businesses. And that was a big reason why we had the roaring 20s. And we're going to have now, no doubt about it, unfortunately, especially in Canada, because we're so tax uncompetitive, the taxes everywhere are going to have to go up. Someone's going to have to pay for this, unless you think that money's going to grow on trees, or we can just print to perpetuity and there will never be inflation. So I would say that the future is still very uncertain. Now, there's no doubt, look, there's going to be, in the United States, wild parties, people going out to restaurants and theme parks and air travel. But here's the deal. The stuff that people are looking at and salivating over, the reopening, recreation services, restaurants, it's 4% of GDP. It's 4% of GDP. Yeah. Normally what gets you out of a recession is the durable goods sector, housing, autos, home renovation. But you see, we already spent so much money on that because we were in the pandemic. It's a very unusual situation. And it's actually, I think, from a mindset of an investor or somebody who's looking at the economy, to get excited over a restaurant-led recovery, to me, is extremely weird. A recovery led by the restaurant sector. Okay, as far as I know, we still have to eat, whether you buy your food at the groceries or you go out to your local bar or restaurant. So I do think that we're going to have a couple of quarters in the U.S. I mean, look, we had $900 billion of stimulus, Donald Trump's last hurrah, December 27th. And then here, Joe Biden is running a government, but like Joe Clark did in 1979, where he thinks he's got this massive majority in the House and the Senate to really redo society. I think he's going to fall flat in his face. But let's face it, 1.9 trillion on top of 900 billion. Now, it's all transitory stimulus, but how do you not get a second and third quarter surge in economic activity? I mean, even the biggest bear in the world knows that this money will get saved. The money would also get spent. It's such a gargantuan amount of money. But here's the reality. This is not a permanent wage increase for society. Now, maybe people will say that this will morph into universal basic income. Well, we'll see about that. Remember, there's going to be another election in the midterms in 2022. I'm not so sure Americans are ready to go to a UBI. But you see, I think that what they've done in the States, and this will have an impact on Canada too, is Biden has created and his team the conditions for a boom bust.
Yeah.
For a boom bust. And I'll just tell you one thing. The one thing that really hit home last week with the Fed meeting, because everybody's talking about, well, look, the Fed took GDP growth from 4.2 to 6.5, and they're still keeping rates at zero. But actually, when you trace out the quarterly pattern, implicitly what the Fed's telling you, because so much of the stimulus is front loaded, that fourth quarter is going to have a huge growth relapse. And I noticed that the Fed did not touch their 2022 or 2023 forecast. So they are telling you that one of the reasons why they're not changing policy based on short-term stimulus is that there's no multiplier impact on this. There's no carryover. It's a one-off that'll last for a couple of quarters, and we'll see how the markets react when they see how the emperor is disrobed in the fourth quarter. Because whether you're taking a look at Canada or the United States, Pamela, you asked me about the economy. I'm going to ask you the question, maybe. What is really the sources of vitality in this economy beyond stimulus checks and vaccines? What else is there?
Yeah, not a lot right now. We're watching the figures. Well, I mean, there were some numbers today just on even in Canada, and we'll come back to this later. But, you know, the infrastructure bank in this country that was designed to partner with the private sector, zero, nada, no input from the private sector because there's not the trust factor yet.
Well, you know, let's take a look at Canada, which I got to say, you know, because we've created a bit of a mirage. Because, you know, when you have the central bank financing these massive deficits and you just hand out money more than people actually needed. I mean, it was the first time we had a recession, whether exogenous or endogenous. The reality is that we've never had a recession before where personal incomes went up as much as they did in Canada. And of course, they went up because of government transfers, and a lot of people made more money. And it's true in the States too. Imagine the distortions you create in the economy when you pay people more than they were making at their old job. And then the question becomes, well, how do you ever take that parking permit away from anybody? But it's created a tremendous amount of distortion. Not that the economy didn't need a stimulus, it just was so untargeted along the way. But the point I'm making in Canada is that what is the industrial strategy in Canada? I mean, beyond, say, you know, making the move towards carbon-free economy, going towards green energy. Okay, well, that's really, you know, going global. That's all well and good. But what happened? Like, how come there's not more accountability for how it is? We had SARS in 2002, 2003. We had SARS. We had a health scare, and
we
yet
still didn't.
We don't have.
Sector, yeah.
And instead, no. What do we have? We have a government that promotes the legalization of cannabis. Our focus is on weed. And we're left caught with our pants down because we don't even have a manufacturing facility here to produce vaccines.
Yeah.
I don't know. Like, why does India? Now Israel had a strategy to buy. Israel had its own strategy. How is it after we had SARS, we had no healthcare strategy here to protect the population? Nobody talks about it. And then you come out with all the problems that Canada had going into this crisis. They've just gotten worse. Debt. What's going to happen with taxation? What happens to a country? How do you attract talent into this country when you have a 55% top marginal tax rate? And now, how is that ever going to go down or get redressed when you consider the massive deficits and debts that the government's built up in this process?
I want to drill down on some of this stuff because that's exactly the point. We've got it here that in 2020, personal incomes went up, especially for the young and low income. That meant savings rates went up. We've seen the millennials getting into the housing market because they actually have cash in their hand beyond paying down credit cards. But we can't sustain that, obviously, over the long term. But we're hearing from both, as you said, Joe Biden, and we're hearing it even from the Bank of Canada here, not just the Prime Minister, that we're kind of going into another phase here, that even the bank is moving beyond its core mandate to address employment concerns or green growth goals. Are we seeing a real political shift as a result of the pandemic, or that the politicians are using the pandemic to be able to make that political shift?
Well, look, I think that the answer to the question is 100% yes. I mean, and it's actually more evident in the United States
Right.
than I'd say is in Canada. In Canada, we chose to elect and then re-elect a government that was much further to the left than Stephen Harper was. In the United States, in the U.S., they can't make up their mind every election cycle what they want. Right? We'll elect Clinton. Oops, no. Then we'll get George W. Bush. Oops, no. Then we'll get Barack Obama. Oops, no. Then we'll get Donald Trump. Oops, no. And then Joe Biden. And look, they got an 8-seat majority in the House, 1 seat tiebreaker to the vice president of the Senate. And like I said, they're behaving like Joe Clark in '79, that we're going to operate on this mandate. They are really moving quite radically here, in my opinion, on fiscal policy. I would say in Canada, let's face it, we had already been shifting towards the left. I think that, the situation in Canada is a bit unfortunate in the sense that, look, there's got to be accountability for why we chose to leave. Our focus was so much on cannabis. That's great. If you're a cannabis investor, boy, you made a lot of money. But nothing on, but there's no accountability on why we did not have the capacity to produce our own vaccines. We have to rely on the kindness of strangers. And I'll tell you something else about the challenges for Canada is Joe Biden is not our friend. Joe Biden is not our friend. This Buy America is really no different than America First. Okay, this is a different form of protectionism and government procurement.
We saw it after 9/11 as well.
Well, I'm just saying that basically, when people talk about, oh, well, we're going to share in the spoils, the U.S. fiscal is going to be the tide lifts all the boats. The U.S. and like everybody else, this is every man and woman for himself globally. Okay, and so the U.S. is going to be moving towards a much more protectionist policy, and I don't mean necessarily on tariffs, but they're going to incentivize U.S. production to come from abroad, wherever it is, and to come home. And so Biden, I think, is surreptitiously going to be running a much more protectionist policy than Trump did. At least Trump was very vocal about it.
He was transparent. Let's put it
transparent about it. But I would say that that's something that we have to be cognizant of. But where's Canada going to develop its relationships with? We've already basically decided how we're going to be with China. I guess the whole world's going that way. Maybe there's something with the UK, considering they left Brexit. I'm there thinking, if I had to advise the government, I'd say, what about India? India could be the next China, and India is not part of that trade deal that was just signed with the Asian countries that China's part of. And India needs infrastructure. I mean, it's one thing I think that Canada could do well is infrastructure. And in terms of what can we do, I always think of, India right now to me is not on the radar screen as much. Of course, they develop their own vaccines. But I'm looking at India actually under Modi as being the next China. And I could see that the US is going to be playing very tough with us on trade. And if I had to devote my time as a small open economy on who the next China is going to be, and if it's going to be India, what is it that we can do for them? What is it that they can do for us? Don't forget, they have a young population. They're 1 billion plus. I'd say that is actually, then they speak English. They're a democracy. I mean, they're almost in some sense everything culturally that China is not. Not that they don't.
We have made ourselves so dependent on China, as we witnessed at the beginning, and whether of this pandemic, whether it was PPE or vaccines or us sort of protecting the Chinese position on this. I think the public is running ahead of the government on this issue, although in recent days, because of the two Michaels, we've finally seen some action.
Yeah, and I just want to go back to something else and hit on something that you had mentioned earlier. The problems in Canada, I mean, when you're taking a look at who it is, when we talked about how did we get this housing bubble in Canada? We talked about it for years. And of course, well, then we isolated that. A lot of it was money coming in from abroad, maybe from China, maybe from other countries, driving up home prices. And then there were some jurisdictions that brought in special taxes to curb speculation from people who are not residents or citizens of this country. But the point is that, but what have we done? I mean, what have we done to attract talent? How do you attract talent with a 55% top marginal rate? How do you do that? Well, and how is that ever going to get redressed? Because we have a government. You're asking me about the future of Canada. What is our industrial policy? What is our policy about relative tax rates. Why is it? Like I'm taking a look, I'm shaking my head as to how this whole pandemic in Canada was handled. And of course, because we have an opposition that right now is eating itself alive. It's amazing to me that the Liberals have a 5 percentage point lead in the polls when you consider how this whole pandemic was bungled. But maybe it's all relative to who your opposition is. But then,
Okay.
you brought up a point before about younger people buying housing.
Mhm.
I mean, that's what I'm talking about. It's great. You buy a house, bring up your family in your house. It seems to in Canada have become homeownership's become like a God-given right. And in a year where GDP in Canada was down 5.4%, residential construction, what do you know, boomed 9.4%. We have a housing bubble of immense proportions. I mean, what ends up bursting the bubble, who knows? But bubbles we know do burst. And we have such an extreme concentration. And in fact, I'd say maybe outside of Australia, the most in the world in terms of the percentage of the economy being devoted towards residential construction. But the problem with housing is that it's a utility good. It does not generate a productivity stream to the economy. And productivity is the cornerstone for future growth. We have policies that are great, stimulate home ownership. But we have a situation in Canada that's absurd, where residential construction today, as a share of GDP, is almost as big as business investment. And ultimately, if we're not going to grow the capital stock, if we're going to focus on the housing stock, which is not productive, and not focus on what are we going to do to build the private sector business capital stock, then you're stuck with stagnant productivity, which is really one of the big stories in Canada. Going into
And
the
has been for a long time.
well,
We're not
the thing is that we prided ourselves. Look at these GDP numbers. Yeah. Well, the thing is that when you have aggressive immigration, okay, you're going to get that. Meanwhile, in real per capita terms, there was no growth. There's very marginal growth in Canada on a per capita basis, because there's two fundamental items on the supply side of the economy. There's labor and there's capital. Capital, I'm talking about productivity.
Yeah.
So I don't hear that. I mean, I hear a lot about fairness, and that's all great. But you know what? If you want to redistribute the pie, you've got to find ways to grow the pie so that it's the tide that lifts all the boats. So yeah, the question really is, what is our industrial policy? What is going to be our trade policy? This is going to be a world post-pandemic where, the world is going to be moving inward. It's going to be a situation where a lot of countries, including especially the US, and this is where Biden thinks he got a huge mandate, is to bring production in what they consider to be national security interest. And that's semiconductors, that's healthcare, food supply. We're going to bring that home. Well, don't forget, Canada is a small open economy, and the US butters our bread. So I would love to ask, what's our response to the fact that the US, if you think the US moved inward under Trump, it's going to be doing that multiples under the Biden.
I think you're 100% right on this. I want to get your reaction to something that Mark Carney has said. He's out there with his new book, and there's lots of talk about whether he has a political future, et cetera. But he's talking about the fourth industrial revolution that's really been fast forwarded by credit, people having more cash in their hand than they did pre-pandemic, COVID, and the climate change, and that we've kind of skipped all these stages. Yes, people want to now work at home or telecommute, so that whole technology issue is going to grow. The commercial real estate market may change fundamentally. The residential home market is changing because people want to be able to work at home, et cetera. Do you think these changes that we're seeing are permanent, or just a kind of reaction which will fade over the next 6 months to a year?
Well, I think it's an extreme statement to make, because maybe since the advent of the steam engine and the cotton gin, the industrial revolution has never really stopped. It's ongoing.
Yeah.
Technology is ongoing.
Right.
To talk about, so the pandemic is, we've learned how to use Zoom and work from home. Well, the thing is that you can only work in one place. You can't clone yourself. So if you're working from home, new technology, Zoom, Skype, whatever, well, all of a sudden that's costing some commercial real estate developer doesn't like to hear that too much in downtown Toronto. So it's all basically relative. Yeah, there's no doubt that this has, the pandemic has changed the way, and I think there's going to be long-term implications that are going to create winners and losers. To say this is precipitated, and we were talking about green energy beforehand. I don't think that's a pandemic. Canada in some ways at the forefront of that, and it's obviously going to happen in the US. So clean energy, but the pandemic didn't reinforce that. It was already in play. But there's going to be shifts in terms of how we approach work and work at home, how we shop. So I'd say that that there's going to be changes in how we live. There's no doubt about that. But let's get a grip here.
But
What kept it. I mean, you're talking about cash in people's hands. There's a difference between government borrowing money, having it financed on central bank balance sheets and giving it to you, than money that you make through either sweat equity or on the job. This is not organic income we're talking about here. This is like a company. This is a company who borrowed money to pay you a dividend. Now, let me ask you a question as an investor. Is that a stock that you would buy?
No. No, absolutely not. And that's so, okay, let's just touch on a couple of those points about interest rates and where you think they're going to go, because that's the concern that everybody has about a lot of people getting into the housing market at this point, that it's all well and good at 1% rates, but in 2 years or 3 years, if they're paying 5 or 7 or 9, they may not be able to carry the load. So do you think that is going to happen?
I don't think interest rates are going to be going up for a long time. Now, it's not going to be a straight line, and they could, they could go up for a little bit. They'll come back down. There's just too much debt. You can't have, in Canada, the total, when you look
governments can't afford it.
Well, not just look at the corporate sector. Actually, if you look at in Canada holistically, and you look at households, corporations, and governments together, including the provinces, by the way, it's 400% of GDP. Yeah. We have total debt at 400% of GDP. It's gone up 100 percentage points just in the past year. It's gone up in the past year what it took a decade to do. How do interest rates go up without creating an unmitigated disaster? And we're not the only ones. Every country, the United States is 360%, and we're higher than they are. How do rates go up in that environment? So people have it in their head that, we got these supply shortages and semiconductors, and they look at commodity prices and we're going to get big inflation. We're not getting big inflation. We're going to have a temporary spike because of the base effects a year ago. There's going to be some lagged impact from what happened with oil and commodities. Yeah. But inflation is a process. Inflation is a process. And to think that we're going to have a multi-year acceleration in inflation, to me, is an absolutely ridiculous assertion. I know it's in the marketplace. I did an interview recently, I think on BNN, where I was told, well, you're against the market. I said, yeah, well, you have to pick your spots, but you're right on this. I don't see how a pandemic, I don't see how a global health crisis managed to create the conditions for inflation that was so elusive for the past 20 years. I think that there are specific things happening right now that are causing a temporary shift in the price level globally, but it's not a constant source of inflation. And that's why central banks are looking through it. I actually wish Jay Powell would be a little more forceful in terms of explaining that, no, we actually know what we're doing. We're not going through with the amount of excess capacity in the economy. People will say, well, look at all the fiscal stimulus. These are Band-Aids. Okay, these are not recurring. These are just basically temporary. These are temporary stimulus in the economy, as big as 1.9 trillion is. So unless you believe inflation is going to be coming back on a sustained basis.
But we are
interest rates aren't going up. And I'll just say, why don't we just take Japan as a template? Who paved more riverbeds and built more bridges to nowhere? Infrastructure galore. Actually, Japan, I would say, outside of China, has the best infrastructure in the world. Well, so this is after 20 years. Where's Japan's inflation? And where's Japan's interest rates? And people think that we're actually going to deviate from that because of some short-term boom-bust stimulus measures. Let me tell you something. By the fourth quarter, when we relapse because all this temporary stimulus runs off course, the markets and interest rates and all these inflation expectations are going to look a lot different than they do right now, because the markets just can't look past the tip of their nose. They're just looking at next week and next month.
I get that. And I want to ask you about that. But we are also seeing, David, governments essentially printing money, calling it a modern monetary theory, and going ahead because their explanation is the interest rates are so low, it's really not costing us anything. We're seeing the bank continue to support the provinces and the feds in their debt by increasing the bond buy again. Like these things, there's got to be a day of reckoning on this.
Well, look, let's wait and see how everything unfolds. Okay. There's a tremendous amount of uncertainty. It's been a century since we last had a global pandemic. I think that governments back then were a little less compassionate than they are today in terms of how they treat their citizens. And we didn't have a social welfare net back then.
Right.
And so we'll see where this goes. I think that I look at the governments, they're just still fixing a leaky boat. There's still lots of uncertainty. Yes, the vaccines, I got my first vaccine. That's great.
Yeah.
But we live in a global economy. It is a global economy. It doesn't really matter how much does Canada come back when we're lagging behind the US. Europe's a mess right now.
Yeah.
Latin America's a mess right now. Africa's a mess right now. And everybody, to some extent, is interconnected here. So I don't care. Everybody in the United States can get vaccinated tomorrow. But if the rest of the world's lagged so far behind, what is that going to do for tourism, for air travel, for business travel? So it's to me, it's the outlook is very complicated. I can understand why the central banks are saying to the market, Mr. Market, you have a tendency to shoot first, ask questions later. We can't do that because our policies affect the economy with a lag, and we just don't know. Like, who really knows? Who knows this race between vaccines and the variants? How this is going to play out? And then how are people? How you asked the question before, Pamela. How have people's lives been changed? What is the scarring effects from this? It's very interesting to me. Very interesting to me that when you're taking a look at the U.S. data going into the end of the last year, things were starting to really sputter. That if you look at U.S. GDP on a monthly basis, nobody seems to know this. That in October, November, December, GDP was actually going negative. If it wasn't for that big stimulus that Trump signed in at the end of last year, not this 1.9 trillion, we would have been talking about, we would have had a negative first quarter GDP in the United States. It's a start, stop, boom, bust, and the stimulus runs out, and that's the lesson. So right now, everybody is just sucking in the fumes from the 1.9 trillion.
Yeah.
But everybody's making an assumption. How much of that gets spent? How much of it gets saved? And then what happens going into the fourth quarter when it all runs out? What are we going to do back at that point? And that's what I'm talking about, is that, everybody is talking about, and you mentioned it earlier, all the money being put into people's hands. But the thing is that to create inflation, to create sustainable economic growth, that money has got to be put into the economy and then recirculated to create a multiplier impact.
Not just going, okay, we've got one of our participants here who's really asking a question on that point, because you've explained that interest rates aren't really going to go up. There may be a little bit of, the up and down on the charts, but does the central bank and all governments have tools to fight inflation? Because are we actually measuring the right things? I mean, everybody feels like there's inflation out there because things are costing more. Washing machines, food at the grocery store, gas for your car, it is all higher.
Well, there's like 50,000 things that go into the CPI.
Right.
So yeah, there's some things that are being, so firstly, you got to differentiate between what are relative price movements and absolute price movements. And so I would say that, yeah, there are items that have a high commodity input that also have a high semiconductor input, and we know there's shortages there.
Right.
So firstly, yes, we're going to have a temporary increase in inflation, and that's especially on the goods side, and that much is true. But nobody ever talks about, go ask somebody downtown in terms of residential rents or commercial rents, or many areas of the service sector, and really the service sector is most of the economy. We're not Paul Bunyan and Davy Crockett any longer. This is still largely a service sector economy.
Right.
So some of the tradable goods sector is going to have some temporary inflation, and that's the operative word that the central banks are using. And I'm telling you, they're right. It is temporary. There's no way a central bank can influence policy based on something that's temporary. They have to make the assertion as to whether it's a deviation around a trend line or whether that trend line is changing. I look at the United States. How crazy is it to think about inflation being sustained when the U6 unemployment rate, which is the broadest measure, is over 11%? So you can't just look at you're not going to get sustained inflation without there being a wage cycle. You're going to get pockets of inflation, they'll come and go. We had a few of those in the last cycle. They came and they went. Did anybody look at 2009, 2019 and go, oh, wow, what an inflationary cycle? No. But there were a couple of pockets here and there. And most of the time it comes out of commodities. Commodities go up, then commodities go down. But you're not going to get a sustained inflation cycle without wages. And I'm not talking about the top up that we get from our beloved governments, which are temporary. I'm talking about organic wages from the labor market. That'll be the signal. So right now, organic wages in the United States are running at 1%. We have tremendous excess capacity in the labor market. So the thing is that, so you're telling me that, okay, person X is going to have to pay X amount more for his washing machine or her washing machine, and they're going to spend less on something else. And that's what I mean. And that's what I find that when I don't want to sound arrogant here or sound like I'm teaching an economics 101 course, but I find that people I talk to that don't have an economics background can't differentiate between a relative price movement and an absolute price movement. And then even after that, what is a sustained acceleration in inflation? And what is just a temporary deviation from the trend line?
Yeah. Okay. Small business debts, 135 billion. These are the folks that generate jobs. In many cases, good paying jobs. Sometimes it is just as you're talking about the restaurant sector or public service workers. But that's a huge burden on the job generators in this country. So who is going to create the jobs? Where is this productivity going to come from?
Well, I mean, that's what I'm grappling with.
I'm asking you to be the finance minister and write your very own budget. What would you do?
Well, look, I do 100% agree. I think it was with the IMF that we need to have a fiscal anchor. We have to introduce certainty to what is an uncertain fiscal outlook, and even if it means that we have to have ranges. But I think that so we have to have basically a situation where there is a long-term plan to get our debt to GDP ratio down on a more sustained basis without relying on rosy economic forecasts to do that. And how that's going to be done, it's not going to be easy. I certainly hope that we don't go the route of raising taxes. I wish we were actually in a position where we didn't start. The starting point in Canada was not a 55% top marginal rate in Ontario at such a low level of income. We really should have come into this situation much more tax competitive. So it's going to mean making a lot of very tough decisions on other government spending priorities. That's point number one. Point number two, I said before, I think that what are we going to do on trade policy in the context of a more protectionist Biden administration? What are we going to do about that? And then, so what's the long-term strategy? And I don't know if it's too late. Like I'm looking at Norway. Why does Norway have a $1.2 trillion sovereign wealth fund? We're resource rich.
Yeah.
What happened to Canada's sovereign wealth fund? How come nobody ever talked about it in this country? All the things that could have funded. All the things.
Well, Alberta used to do it, but they can't now.
Yeah, well, and so, but I'm talking about nationally, and of course, you're right.
No, I agree.
Going back, decades and decades, and then Alberta got it. And well, then what happened, of course, is we had the downdraft in oil prices and reckless fiscal policies in Alberta. But what I'm saying is that our future is actually very challenged. I'm very disappointed that that whatever reason I would try definitely and try and curb this housing bubble. I can't even believe I was again interviewed and people were saying, do you really think it's a housing bubble? And one of my competitors on Bay Street said, well, the bubble isn't people talking about it being a bubble. No, when you're taking a look at, I'm really concerned. And that's why, again, if interest rates ever went up for every reason, do people realize how overexposed Canadians are to residential real estate?
Exactly.
And that has a second round impact on consumer spending, which is 60% of the economy. So look, I don't want to come across here as Debbie Downer and Eeyore the donkey, but I think that I want to have an industrial policy that's going to redirect resources from, look, Celestica, that used to be our national champion, right? Electronic components. We have a shortage. So not only are we caught with our pants down on providing PPP for our population after SARS, which is unbelievable. No accountability, by the way, for that. But there's a shortage of semiconductor manufacturing capacity. The U.S. is going to be bringing that home. You see what Intel is doing in Arizona today. So, like, where is our, what we rely on the good graces of other countries. So Celestica, I just saw today, I don't know if you saw it, they're selling their property at Eglinton and Don Mills to build condominiums. So a former technology champion in Canada is selling their real estate to build condos. And there's like, what is going on? That's why I call this the triple C economy: crude, cannabis, and condos. If you ask me to write a report on Canada, I could just do it in 3 words.
You could do it with those. But as I interpret what the Bank of Canada was saying this week, they've kind of concluded that this housing bubble is inevitable, and maybe we need the price growth in the short term. But you're saying maybe we need some action to burst that bubble.
Look, it's too late. It's too late. If this bubble ever bursts, it'll have really adverse impacts on household balance sheets.
Yeah.
And and everything you're telling me, oh well, the dry powder, look at the high savings rate of future consumption. I got news for you. That savings rate, if home prices go down and people see their balance sheet contracting, that savings rate is not coming down to fund consumption. So this is years of promoting residential construction. This sort of what was it about the sort of investment we were attracting into this country? The foreign investment right now, foreign direct investment is subsiding dramatically into this country before the pandemic happened. But somehow we attract money from foreigners into condominiums.
But for the wrong thing.
But I'm just saying, but people just, it goes in the newspapers, people talk about it. Nobody seems to even care about it. I said before, a house does not generate sustainable cash flows, recurring cash flows, and productivity growth. And we've had no capital deepening in this country. Productivity growth is anemic. And you're asking me if I was finance minister, well, I could tell you what I would do is I would take my team into a room over a weekend, ordering some beer and pizza, and talk about these are the issues we have to resolve. We are overhoused, and we lack productivity and capital investment. And the foreign direct investment in this country is not going into manufacturing. It's going into residential condominiums.
And the other thing, David, is the foreign direct investment used to be in the resource and energy sector, but the signals we're sending to everybody is those aren't in favor anymore. We're greening up our economy, so don't put your money into oil sands or other energy projects. So we're also sending those signals pretty strongly.
Well, look, I think that and this is where a sovereign wealth fund could have really helped, redirect resources transfers from the old fossil fuel economy towards the green economy without disruption. It's a choice we made. The choice we made was really not to do anything about it. There's got to be some accountability along the way, though. And I think it really comes down to the fact that, we do lack an economic vision. And I'll tell you, I've been in the business for over 30 years. And I'll just say here right now, I have voted for both political parties in my life. But, the last time we had a party that really concentrated on productivity and competition was the Mulroney government. It was.
Yeah, no.
Then of course, look, you get to tip your hat to to Martin and Chrétien that brought us back into the population back then was ready for it. Was ready for fiscal restraint.
Yep.
And we had the internet boom, so that we didn't feel it that much in the economy, although that's not something we created. But I think that what do you do about small business, and what do you do about attracting foreign investment? You've got to couple your your just society and fairness social policy with a taxation policy that's going to reward capital investment and risk. So how you're asking me, do I think that the debt should be forgiven? Do I think, look, then there's some cases where uh, individuals or businesses that were directly hit. Um, there's a case for that. I'm not saying forgiveness, but I'm saying that certainly some sort of relief. But I think that we have to. And look, who hasn't been saying this? As if the CD Howe or the Fraser Institute hasn't been saying this for decades. This falls on deaf ears. How do you basically use the tax system to promote capital investment at home, but also to attract foreign direct investment? And I'm not saying into the resource sector. We used to have a vibrant manufacturing sector in this country, and it was only 20 years ago. What happened to it? And you can't say you can't say, oh, it's all about China, because the U.S. actually, and this is one thing I'll say, no matter what anybody wants to say about Donald Trump and his character, the reality is that manufacturing came back in the United States.
Absolutely. Okay, now look, I can't have a conversation with David Rosenberg and not say, what is going on in the markets? Give us your take.
Well, I mean, I can describe to you what's been happening is this rotation from growth to value, or from defensive and technology to cyclicals, because of all the anticipation of the reopenings, and it's going to be one big spending party with this Biden package. And so really the stock market has really just been meandering, and you've seen this dramatic rotation from growth to value, which might have some more legs, but I think it's largely played its course. Look, I think that the biggest bubble out there that I see in the stock market is in passive index investing. And I really think that for anybody who is going to be in the market, hopefully you know what you're doing, but I would not be buying the indices. I think that you should be buying stocks or sectors that you think have earnings visibility that's not fully priced in. There's parts of the market that I like, and there's many parts that I don't like. There's parts of the world that I like and others I don't like. I would not be investing in the US today writ large. I think there's better opportunities. Even in Canada is not nearly as expensive as the US is if you're looking at valuations. But the UK market looks interesting. There's still many parts of Asia that looks interesting. I'm not a big believer in this commodity super cycle. I would avoid that like the plague. The last time you heard about the commodity super cycle from these promoters on Wall Street, research houses, was back when oil was hitting $150 in the summer of 2008. How did that work out? But I'd say right now, I think that you want to be a little more defensive. I think that this move up in bond yields has provided a pretty nice buying opportunities in the Canadian bond market and the treasury market. I'm not a big believer. You have to believe that inflation is not going to make a sustained comeback, and that the central banks are going to tighten policy aggressively. But I do like the bond market right now, and the fact that people say to me, "Boy, you're alone on that call," well, that even emboldens it that much more because it's so out of consensus. But if I'm going to play the recovery trade, I still like energy stocks. I like the financials. I've liked the Canadian banks for many months now. There's energy infrastructure, and actually it's not just energy stocks, but you could buy energy debt. That's still, look, there was a great article today in the Wall Street Journal on uranium and what Cameco stock has been doing, which is a page B12 story.
Go Saskatchewan.
Yeah. So, well, there you go. Rah, rah. But there's I think you really have to pick your spots. I think that the easy money was over a long time ago. But I think that when push comes to shove, if you're a long-term investor looking for visibility, I think that the stay-at-home sector or the work-at-home sector, that is a secular theme. That is not going to go away. So I think all the areas, and I would say in technology that has become like a utility that have fed into that work-at-home thematic, and now you're getting a better opportunity because a lot of these stocks have corrected. You might be able to get in at much better price levels right now, but they have long-term visibility. So I'm still actually a relative fan of parts of the technology sector.
Okay. Well, that's really great insight, David. It is always wonderful to talk with you. I haven't seen you for a long time, and this was a great opportunity. So I see you're.
Senator, I think I'm going to just ask this one question because
Okay, you go ahead.
no, and it's first I'm taken aback by the level of the discussion, and thank you. And David, I do want to thank you for your, this may seem a little gratuitous, but your 30-day trial on your website, actually, because that in and of itself got you here. And so we bought onto that, and I've been able to benefit from a lot of the data sets and the stuff you've been producing. But here's the question I have, and it's one when I heard David Dodge come out at the end of August and say this is bullshit and use terms like that, which struck me quite a bit.
For David Dodge, for sure.
We immediately jumped into a scenario where we do have a $400 billion deficit, and as you referenced, a $2 trillion debt. I thought we've jumped to the next generation. I think we're now looking at the group under 35 who are going to get engaged. And when I look at that group, all I hear is, and for all the right reasons, perhaps, someone like Greta Thunberg and OAC in New York, Ocasio-Cortez. And my question to you, I guess, would be, in your line of work where you are and the observations you make every day, are you hearing other voices under 35, people we should be listening to, people we should be talking to?
Wow, that is a great question, and it's interesting that that you asked me that, because one of my business associates, one of my business advisor actually said to me, I noticed on your webcast with Dave, you don't have anybody under 35. He actually said that to me. We social distance, had a glass of wine in his backyard a couple of weeks ago. Jeff Burchell is his name. And he says, I noticed that all your webcasts with Dave don't have anybody under 35. And he says, do you know anybody under 35? And I said, well, only my three sons. But I don't know the degree of nepotism to get them on one of my conference calls. So the answer to your question is, it's a great question. And that is actually, and I said to Jeff that this is actually, I'm going to make this a goal of mine because I'm sure that there are a lot of entrepreneurs and business startup owners who are a lot younger than I am, who are in their 30s, that that actually should be heard. And so my pledge is to seek them out. If anybody is listening to this call and would like to come on one of my webcasts that is under 35 or younger, that has something that they'd like to say about how they would define the future, since it is more their future than mine, I'd love to hear from them.
Exactly, and that's our
Okay,
approach.
next time you come on, David, you have to bring somebody that's under 35 with you. That's the deal.
Thank you very much, Senator. Thank you, David. This has been fabulous.
Yeah, thanks, David. I think that was a really important point too, and we're all trying to do it in our work worlds in this. So before I leave you, just a reminder, and put this on your calendars, Friday, April 23rd, 11 a.m. Eastern Time. On the monthly, Sean Spear and Robert Asselin will be joining us on the monthly. Their job will be to help us digest the first budget that we've seen in 2 years. Sean wrote budgets for Stephen Harper, and Robert wrote them for Bill Morneau. And I think we'll get some really interesting insights. So put that in your calendar. Thank you all for joining us. And David, again, all the best. Great to talk with you. And we'll be in touch when you find your 35-year-old.
Putting out the search right now. Thanks a lot for having me on.
Yeah, thanks, David. Okay, thank you, everybody, for joining us today, and we shall sign off. Thanks.